So welcome back to my YouTube channel. It's King Ruby right here, the founder and CEO of Blue Kings Academy. So today we're gonna be talking about the higher time frames. Now, you're gonna be learning in this video. You're gonna be learning how to trade in line with the higher time frames. A lot of new traders want to focus just on the smaller time frames. They want to do work with the 5 minutes, 15 minutes. Now, these time frames, trading them alone is very risky, and your win rate will be really low because you need to know what the higher time frames are doing. And when I say what the higher time frames are doing, I'm going to show you how to frame your trades from the higher time frame and how to know determine every day whether you're going to be looking for price to go higher or go lower on the higher time frame. So let's get right into the video. Right, so let's get right into the chart. So when we come to the higher time frames, what I consider as the higher time frames in my own strategy, the way I look at the market is I consider the higher time frames to be the monthly, the weekly. So I'll put it this way: the monthly, the weekly, and the daily. Okay, they are like higher time frames to me. Why my medium time frames are the 4 hours, the 1 hour, okay, and my lower time frames are my 15 minutes and my 5 minutes, okay, 15 minutes and my 5 minutes. So what we're going to be looking at so deeply is the higher time frames. Now, when it comes to the higher time frames are responsible for direction. We'll show you the direction where the market is going to. The medium time frame is for you to be able to time or have areas where you can trade off good areas. I call them point of interest. Some traders call it area of value, where you can trade from in that desired direction. And then your smaller time frames are your entry criteria. As simple as that, okay? So what this means is that if on your higher time frame the market is bullish, so let me make this white. Make this white. So if on the higher time frame the market is on a straight line going up, on your medium time frame that would look like this. Yes, this straight line here on your medium time frame is going to be looking like this, and all you need to do is wait when price is pulling back to a very important area. Okay, now that important area here is what I call the area of value or point of interest, and from that area, how's that area going to be looking like on your 15 minutes? It's going to be looking bigger, right? This side is going to be looking on your 15 minutes, that area will be inflated as bigger like this, and price would actually move this way towards it in a quick downtrend. And when price gets into that area, you want to see some confirmations, then return back to an entry for you to see price go higher. And what is the result? The result is something like this, and on here the result is still further push. Do you see how it works? Now that's how it works. So it means if you're on this smaller time frame trying to trade without using the higher time frame, so what's going to happen is you'll be trying to sell at all these levels, all this downtrend. You try to sell, you're still trying to sell, and then you lose money because everything will change drastically. Or while you're on this trend, you just keep looking for longs, and you don't know when the pullback is coming. So you'll be trading blindly here if you don't know what you're following. Okay, so today we're going to be focusing on just the higher time frames, and let me show you what you need to know. So when we are talking about the higher time frames, I like talking about the monthly, weekly, and daily because I'm a day trader. For some people, the daily is a medium time frame. These are swing traders, okay? Or the weekly is even their medium time frame, but they are swing traders. I personally, my higher time frames are these three. Now, I don't really care about the monthly because it's too large. It's too, it takes a month for a candle to form. So it doesn't really give me much information I need. What I care most about is the weekly and the daily. That's what I care most about. So How do I frame trades from it? All I want to identify is what trend are we on the weekly and daily. That's what I want to know. What trend are we on? If we are in an uptrend on the weekly and daily, then it means I have to look for where the market is headed to at the current stage. Yes, if you're in an uptrend, some people will just rush and say, we'll look for buys. No. Where is the closest place is going to? When you're in a lower time frame and in an uptrend, you're looking for buys, you just want a pullback, right? Because the pullback happens really fast on a lower time frame. So you want a pullback, so I can buy here. You can buy here and put your stop loss down and aim higher, isn't it? That's just what it looks like on the smaller time frame. But on the higher time frame, it doesn't work like that, because it takes weeks and weeks for price to pull back. It takes a lot of weeks and days for price to pull back if you're in an uptrend, for instance. So now we're in an uptrend. We need to know, is price ready to go higher from this way, or it wants to pull back? So if you've gotten the signs that it wants to pull back, then you're sure that, okay, your next destination is 50% of this swing, at least is your next destination, before the trend continues. So this swing here is very important. There are lots of weekly or daily candles inside this swing, and on the lower, medium and lower time frames, here is a downtrend that you need to ride. So because you know that the higher time frame wants to pull back to this level, then you can ride the existing downtrend on that place I circled. That existing downtrend in 4 hours, you can be able to ride it and make money off it. Okay? Another way to know what the higher time frame is doing is that if the higher time frame is actually already at equilibrium here, you want to find out, are their point of interest in the discount area. This is my Fibonacci, this premium, this discount. Are their point of interest on my discount area? If they are point of interest on my discount area, then I want to still keep selling till price gets there. Now, assuming whatever we are doing here is the weekly chart, assuming this is the weekly chart, when we get this level, how is it going to be looking like on our daily chart? It's going to be looking something like this. This is how it's going to be looking on our daily chart, because the daily chart is smaller than the weekly chart. So this point of interest must align perfectly with the point of interest that we have on our daily chart. Very important. If it doesn't align, then we would keep selling. What I mean is this. Now let's assume this big box is this box on the weekly chart. Is the demand on the weekly chart, and this smaller demand here is the one that is on the daily chart. It's also found in the one in the weekly chart, which means, okay, it's powerful. So what are we going to do? If price plugs inside here, does it mean you should start looking for buys? No. It's still bearish, because price needs to still make it to the demand that is in the daily. Do you understand? So we still look for sales even if we have not asked. But when we get here, we know that, okay, there's a possibility of price was reversing back up. So how do you take advantage of this? Over here, let's say price, you came and you met price here in that particular trading instrument or pair on the weekly chart. You want to keep looking for buys because you know you're headed towards this, because if you get here, you can go back up. So when you go to the daily charts, the daily chart will be what? In a bearish daily charts will be in another bearish arrangement, bearish program. That's the word. And when it's in that bearish program, you want to trade in line with that bearish program. Okay, so now how can you trade in line with that bearish program? In as much as the daily is also a higher time frame. talk about it now. This is where multiple um multiple time frame analysis comes in play. So if for instance you want to ride a trend like this on that daily chart, okay, it's simple. So I'm going to draw my daily time frame again so I can see how to do it accurately. Okay, so we are here, just like how it's here. We are here at the equilibrium. So on the daily chart, of course, we are bearish. Okay, so doesn't mean, because it takes one full candle to form on the daily chart is formed in a full day. It takes a full day for one candle to form. So what is there is you cannot force the market to pull back. Do you feel me? Before you start looking for sales again, you don't do that. So you look at the 4-hour chart. The 4-hour chart is what will tell you what to do. So I'm going to show you what the 4-hour chart will look like. So now this is the 4-hour chart, for instance. How is this whole area going to be looking on the 4 hours? See this whole area on the 4 hours is going to be looking like something very, very, bearish, very bearish. So that's a lot of price action. Okay, so this my green line, you have my green line here, for instance. You have this green line here. So this is actually the leg that is meeting this equilibrium line. Okay, now let's assume this is our equilibrium line here. I won't make use of this. I'll make use of horizontal ray, and I'll make it green so that you can understand me. Yes, so this is our equilibrium line here. So since you can't force the market to retrace back, all you have to do is wait for 4 hours to retrace back. Okay, that 4-hour retracement around that area, this is where you want to look for yourselves. Okay, this is where you want to look for yourselves, around this box, around this area. Okay, that's where you want to be looking for yourselves, around here. You're not going to be waiting for this to pull back. No. So when you look for that sales around here, you take that sales and close your profits at this low. Just easy. Come the next day, if the next day the candle keep printing bearish, keep going lower, what you see on the 4-hour is more break, return to point of interest, and drop. So all of these areas is where you're looking to take your sales with the help of the confirmation from the lowest time frame, like 15 and 5 minutes. This is where you keep taking your sales. Now there'll be a time when the daily will be like it wants to retrace. So when it wants to retrace, remember this is a target. This is a target. Still have that in mind, but it wants to retrace. So when it wants to retrace, this is how it looks like on the 4-hour chart. On the 4-hour chart, it wants to do something like this. Okay, it wants to do something like this, which is it flipping bullish back. So immediately this kind of thing wants to happen, you want to draw your fib on this very small trend here, so that you can buy your way back up until you get towards equilibrium of this same place, because we hoping it to retrace back to the premium before a further drop. So you want to catch that move, because that move can last for more than a day. So yes, you're bearish doesn't mean you ignore those moves. So when you're being able to figure it out, this is how it's going to be looking here. Okay, it's going to be looking like this. this small fib here is going to be looking like this, right? So when it changes character, remember your point of interest where you want to drop from will be situated there, and on 4 hours it's going to be showing like this. So when you really want to buy into that point, when it breaks this, you wait for it to pull back to a demand and you look for buys. It goes up, you wait for it to pull back to demand, you look for another buys again. When it gets into here, you want to stop looking for any buys because here's a potential turning point. And oftentimes, when it gets there, it later starts dropping back to the destination again where it was going from. And that's what you see when price will just change character again. See, the price will just change character again. You see it? So what happens is it changes character again. We trace back supply. We start looking for sales again. The same sales again. Start looking for sales again. We are just aiming at this place, and when we finally get to this place, doesn't mean we'll stop looking for sales. No, because we have an inner destination in the daily charts, which is this lower demand. That's the inner destination. So wait till that destination gets crushed. Okay, so if that destination gets crushed, we go lower. So we keep selling. Once we get here, we stop because buys might happen from that. So I'm trying to show you how these time frames do blend and how to look for trades and how to know where the market is going to. So now this is just like a simple as direction something. So I'll just go straight to an example and show you how to deal with this in real time. Because there'll also be times when the market does this, breaks above previous high, just like that. Okay? Breaks above previous high on the higher time frame, just like that. What do? Do you start going to look for sales because you're anticipating a retracement? No. You just follow your medium time frames that are, returning back to point of interest and keep buying up. Yes, keep doing that, buying in your 4 hours time frame and keep buying up because it does not show you any sign. But when it shows you sign on the 4 hours that price is not going up again, it wants to break down. That what was going up before had decided to break structure, change the trend. So what do? You know that that's a sign that on the higher time frame there wants to be a pullback, and then you're willing to sell. You're willing to sell because on the 4 hours you retrace back to a premium zone, and then you want to look for sales from there lower. Okay, you want to look for sales from there like to keep going lower. And where is that lower? That lower on the higher time frame is a retracement. And once you get to equilibrium, everything can resume even back. So I want to show you how it is on charts. With my trade, I took DJ, one very nice trade I took. So with my team, I want to explain it. So this is GBP This is the daily chart. I want to take a look at the weekly chart first. Okay. So this is how my weekly chart looks on GJ. I can see GJ is bullish. Okay. Fractal structures are bullish. You see that, right? Fractal structures are bullish. We're going higher. So this is the last fractal low that has been formed. I can't call any of these a fractal high yet. What's my reason? My reason is because if I call this a high, it has not been able to retrace properly yet. Look at where it is. So I can't tag that as a high yet. So, but I know that the market is like, I see it as an impulse. It's just trending up. The only pullback I saw was this big ass green and red candle. Every other thing is just straight up. So I see it as a straight up impulse move. We are still going higher. We have not made any serious retracement yet. So on the daily, what do I see? That same areas that are called my fractals on the weekly, they're going to be called my internal structures here. Internal structures are way bigger than the fractal structures. And that point where that was like a straight line on my daily, it's now fractal highs. You can see it now. It's now fractal highs. You can see it now. This internal structure, I'll just call it. I'll just make it red. I will not confuse it. So now these are now fractal structures. So based on how this higher time frame works, so this on my daily is qualified to be a fractal high because it pulled back significantly and everything. But now I'm talking about this day. I think it was a Thursday. Yeah, it was a Thursday on this particular day. Now we have been able to pull back to demand. Fine and good. So where is it? Where do you think we are heading to? We are leaving from here. We are heading to here next. That's where we are going to next. So the market we give you opportunities on the 4 hour all through these points. This straight line on the daily on the 4 hour is going to be something like this all through. Trust me, it's gonna be something like this all through. So you want to catch each of those trades until you get here. So you are on the way to this place. So what you should know on the higher time frame, you should know where you are headed to. If we are at this top and you have seen the signs of price wanting to go down, we know that the next is your retracement. And if you draw your fib from this low to this high, where will the retracement end? You know that these are the point of interest on the discount, FVG and other blocks. So you're going to be looking for sales all the way down, provided the 4 hour gives you a change of trend move that shows that okay, the trend has changed on the 4 hours. When it changes on the 4 hours, then that's a go ahead that this is about to have a serious retracement. So you can catch sell trades, lots of sell trades towards that point of interest. And then when you get to the point of interest, you can look for another buy trade from the 4 hour and ride them up till you know that this is the next destination. Makes it very easy, isn't it? So right here, what's going on here? Let's see how I caught that trade that day. This is on the 4 hour chart now. So on the 4 hour chart, we're going to look for our structure, know what price is doing, look for our structure and everything. So you see when the market flipped bearish here. So you see when the market flipped bearish here on the 4 hour chart. See that when you flip bearish here on the 4 hour chart, it's because we are now going to retrace, and then it went down first. We never knew it has changed structure. It went up, and then when it closed below this, I know that guess what, price was about to go lower. So that first push to the downside, you might ask me, has it not already pushed significantly towards the fractal structures, towards the point of interest we have here? These FVGs are decent, like this week pulled towards it. Yes, it did, but see what was going on after it. When it pulled into that FVG on the daily, that FVG did not match with any point of interest on the 4 hour chart. Look at it, it did not match. Look at when it entered first, the week. Now if you look at 4 hours around that area, do you see any serious point of interest around there that the week attacked? No, the week just came. There was no FVG, there was nothing there. Okay, there was nothing there. It was just like a liquidity sweep from this low actually. So when it pulled, now the 4 hour was officially bearish. So when it pulled back, if you draw your view from this high to this low, you would find out that price from here pulled back to the premium and entered into this FVG, and that was where the sales started back till it got to the main destination it was trying to get to, which is this demand. And not just the daily demand. Inside the daily demand, there is a 4 hour demand right there. Right there. Although price did not get to it, but it's a very important area. Feel me? So it broke this low, and when it broke this low, this is when we flipped bullish, because it came down to this low, it broke it. Feel me? So when he broke it, still when it broke first, pulled back, he broke it again. So this was a high that led to this break of this. So it means character flipped here. Character was changed right there. So we kept seeing the ride of this, bullish trend on the 4 hour. That was a sweet ride. So price riding up, riding it. So take a look at it, riding it up, riding it up. So personally, when price went this high, I drew my fee, but I was waiting for that serious pullback from here towards here. Now that pullback, I know that where are we headed to? Where is our destination? Up, up from the daily time frame. We know that we are heading up. From the weekly, we are just on an impulse. We know that we are heading up, up, right? So when price pulled into this demand, what happened is I went to my lower time frame, I looked for my buy confirmations, and I got in. I'm not talking about lower time frames today, but I'm talking about the higher time frames. So this is how to trade in line with the higher time frames. You see that this point of interest I'm choosing is on the 4 hours. I'm not choosing the one that's only on the 15 minutes. I'm not choosing the point of interest that is on the 5 minutes or even 1 hour. I make sure it's on the 4 hours. Make sure, and the direction is leading to a particular high on the daily. See, so everything makes it easier for me to catch the trade, and that was a very sweet trade. Okay, now we are still on that same road to this place. This was what happened yesterday, which was Friday, as I when I'm shooting this video. So watch, it kept trending up. You see, it kept trending up. You see, we have created new highs, kept trending up, new highs, it kept trending up. So if you draw your fib from this low to this high, you see that price retraced into the discount, and when it retraced into the discount, it ran what? It ran a low. You see that? Now this running of a low, liquidity pools, I take them like a POI. Okay, let me make it a bit thicker. I take it like a POI. Why do I take liquidity pools like POIs? Because they are POIs. I treat them like averages and a order block. If on the discount level price comes and run a sell side liquidity, then it's a go ahead for me to look for confirmations on the lower time frame and take my trade to this high. I'm always exiting at my 4-hour high, is not my overall high. This is where we are chasing, I know, but you have to take out money if you don't want to hold your trades too long. Since I'm a day trader, I just want to hold it for a day and get out. So I'm not holding and aiming at all these places, but on the 4 hours, I'm aiming at this place. See, so trading is not difficult the way you guys complicate it. Yes, trading is not easy, but it's something that if you follow the principles and things you have to put in place. So if you're looking at the direction, look at it from the idea of what the higher time frame. No, I've just shown you an example with an uptrend. Maybe I should show you a different pair that shows you more of the downtrend. So let's see. Let's look at gold. So now look at what gold is doing. Take a look at what gold is doing right now as we speak. This is a high. Okay, can you see that? This is a high. I'm gonna reduce this. Okay, that's a high. Make it green. Now price just round that high in gold, meaning price is in an uptrend. If you look at what gold is doing for a long time now, the fractal structure is in an uptrend. Can you see it? When I mean fractal structure, please don't get me wrong. is because if you zoom into what is happening long time from monthly chart, you find out that there are other structures involved. If you don't understand what I mean by fractal structures, internal structures, external structures, check on the video I'm going to recommend at the end of this video, okay, at your top left corner of your screen. Yeah. So this is something that you need to know. You need to learn about market structure properly. You need to learn market structure properly. If you don't learn it properly, you will have an issue. So there are three layers of structure. There's external, there's internal, and there's fractal structures. So fractal structures is the one that we use the most and everybody uses and the rest of them. But the other structures help you know when fractal structure wants to flip, wants to change. And also know when you want to change from bullish to bearish and all of that stuff. And it just improves your win rate if you're using other structures to also know when, you know. But no need of putting too much stress or making it look complicated. We are in an uptrend on the daily chart. Okay, look at it. We are in an uptrend on the daily chart. Now, can you see that when we broke above this place, we broke above it with a wick? What does that mean? Personally, when I see a break of structure that happens with a wick, I understand that no point of interest will be holding for some time. No other block will hold. The only things that will hold at this level that might take price higher is what? Sell side and buy side liquidity. Okay, these are the things that will send price higher if at all price wants to continue bullish. Do you feel me? Now, if price want to still continue bullish to the upside, then price would run this, okay, and go higher. Remember, not this. Don't get it twisted. Not this. This is going to be, this is the origin. This is the low that led to the break of this. This low led to this high. So if this low gets taken out, then we are flipped bearish. But sell side liquidity is like this. If price comes and runs it, we can continue higher. So how do you take advantage of a structure like this? When price started showing signs of pulling back, let me circle it. When price started showing signs of pulling back around here, the first place to know is your 4-hour chart, to know when these trends want to pull back. You peep at your 4-hour chart. Did it change? It was bullish before. Did it change to bearish? If the trend changed to bearish, then you have all the reason why you know it's like that. So you see the 4-hour has been trending to the upside. So it breaks up, it retraces, it breaks. Now you see that it just flipped bearish here. This was the low that led to this high. It flipped bearish here on the 4-hour charts. So what does that mean? You know that you're officially bearish now. So out around this place, you don't know that you're bearish until when it flips that place. Now, okay, this is an official retracement. So that retracement, you'll be looking for sales as long as, if this is your fib now, we have gotten to the discount level, but you don't have to be scared if you're still looking for sales on the lower time frames and medium time frames, because you know we have not gotten to the destination in the discounts level. What's the destination? Sell side liquidity. So we have to keep looking for sales till you get here. That's how you trade this particular scenario. Now, if price comes here and price just closes above it, just keep going down, you know that okay, we have to still keep looking for more sales. Even if price breaks here, I have to keep looking for more sales on the 4 hours. Meaning on the 4 hours, you're just waiting for price to pull back. That's what you care about. Okay, that's exactly how to trade all of these things. Very simple, but you have to be patient because it's not every time you get the setups the way you want it. So how do you take advantage of these sales? Now look at the 4 hours. Now remember these are drawn liquidity. How can we trade to this place? Personally, what I'll tell anybody watching this is you don't have to fight it. We are flipped bearish here. Price has to retrace back to a premium point of interest, which I see as this fair value gap or these other blocks. That's why you have to be patient in trading. Now, price might literally do that and then start looking for sales here for down. Price might do that and start looking for sales here for down. It makes sense, right? But if price refuses to do that and price just runs down straight to this place, then no problem. What should you be looking for? If price runs its way down here, no problem. What should you be looking for? You should now be looking for what? If it sweeps here with a pin back handle, you should be looking for what? A change of character on the 4 hours to ride the bull, because you know that the next area will be here. If it runs here with a pin bar candle, you know what I mean by a pin bar? This is an example of a pin bar candle. Now this is the sell side liquidity. As you can see, price ran the sell side liquidity. This is a pin bar, so price use this wick to do the stop runs. That's what I mean. So if that doesn't happen, then trust me, you have problem. Not really you have a problem. If that doesn't happen, then you know that you're not going down anymore. Sorry, it means you're not going up anymore. If that doesn't happen with the pin bar, then it means it did not respect this point of interest. Okay, it did not respect the sell side liquidity. It did not. So it means we have to still go down. And like I said, once it crosses this low, we have flip bearish overall. So if price runs this and starts showing signs of going higher again, you want to start taking buys at these areas again, looking for buys on the lower time frame at these areas like this, because you know that we are headed towards this. These have to trade a higher time frame. So you see that it requires lots of patience. Now, all this while when price was bullish, you see price is retracing completely back to discount levels. Can you see? See price retrace back to complete this discount level, and you see we entered here. So you see people will look for buy trades around here, and you see it delivered, it went higher. So on these times you get your trades. On these days you get your trade, you return back to other block. On these days you get to trade, but there are days you would not get trades. That's why you have to trade more than one pair. I've taught this countless times. More than one pair is good for trading. Sometimes, like I trade more than one. I trade EU, I trade GU, I trade USD card, I trade GJ. It helps when this pair is not offering. Instead of you to do something very silly, you decide to trade another pair. So you to force things on one pair, try to trade another pair. If you found this video helpful, you know what to do. Click on the like button, subscribe to the channel for more educational content. You have the comment section. Ask your questions on this. See you in the next video.